Good morning, everybody. Welcome. Hope everybody's having a great morning. We'll let everybody file in here for just a minute. Good morning, Butch. Good morning, Hyperboard Jack. Y'all have some interesting names on here. Screen names, I should say. While everybody's joining, make sure you like and subscribe on X and YouTube. You'll be notified when we go live, when we do Hyperborean. Gotcha. Okay. You'll be notified when we go live on X or YouTube midday if we do our midday recap, as well as our post-market recap, and then as always, our pre-market prep, and then we'll post content throughout the day as our team is available on this holiday week here. So make sure you check out our pre-market prep from yesterday. Covered all the content heading into yesterday. The move up, where we're kind of looking we had the elements of a van rally in place, just needed to see some components come to fruition. We have a blog post on that. We've actually posted that before, so if you want to check that out at gameedge.us at our blog. And then I posted a blog post this morning, gameedge.us, about looking for what we call the turn, or shifting from bearish to bullish market sentiment, which we'll cover here today. So, all right, let's go ahead and jump right into it. It's 9:01. Appreciate everybody for joining us. This is Michael coming to you from Game Edge on Tuesday, November 25th. We'll go ahead and cover our three pillars here at Game Edge, as we always do: sentiment, structure, and trend, as well as individual equities if we have time at the end of presentation. So go ahead and throw those tickers in the chat. Or if you have any other questions while we're doing this presentation, I'd be happy to stop and answer those if available here. So I want to look at our market trend model, which really is the essence of how we look at the overall market and how we understand if the market is shifting from bullish to bearish by market participants. In the market trend model, our market trend model, which we refer to as the MTM, is based on the tick index. That's just buying versus selling in the overall market. The key takeaway here is the landscape is the bolded white CT. That's our intraday instantaneous CT. This is indicating in real time what market participants are doing. Are they buying versus selling, or are they selling more than buying? We add these shorter term, what we call railroad track momentum moving averages. This is just, and we add a time component or a time series. This is just to understand momentum, just to understand the direction of the overall market and market participants. Like any other moving average, obviously moving to the upside or the downside is indicative of that. The colored ribbon is our longer look back period. This is how we position longer term within the overall market. And the red being below the cyan is a bearish state. And this is our trigger or our gate for our mechanical portfolios. We would need to see the bolded white CT above the colored ribbon. And the colored ribbon would need to have some sort of positive slope for us to trigger back to entering mechanical positions in our P2P strategy, P trans to PGEX, which we extensively post about, or our wheel strategy, which is very interesting to a lot of people, because most people, if you trade options, know what the wheel strategy is. But as of now, the entries are off because of how we are within the overall market trend model. We were in a downtrend, so obviously you don't want to be entering positions long, but we're recovering and we continue to improve on the market trend model. So what we would need to see is the bolded white CT continue to the upside. Now, historically, this is an area where we see some stalling or interaction when we're coming from the underside of the colored ribbon. And this is a high risk, prone to failure area where we could see this bolded white CT just start to turn back down to the downside. So we'll continue to watch this day over day. Obviously, it's a shortened holiday week. So we may just come into this colored ribbon and chop around a little bit, see some stalling price action, or we could emerge to the upside. So some other components of this market trend model that are really vital and essential to watch is the breadth indicator up here. This is new highs new highs versus new lows. You want to see the new highs extensively expanding above new lows, indicating obviously that market participants are buying more than selling and more stocks are moving up than down. So we did see them just barely outpace yesterday, but not significantly. As you look back here, the new lows were outpacing new highs by a large margin. The second component of this is the filtered cumulative tick. This is plus 1,000, minus 1,000 larger block orders. This is how market participants, mainly institutions or larger market participants, transact. So this has to be large orders being transacted at a given time across the exchanges. So we want to see this extensively moving to the upside, indicating that institutions are entering and putting money to work, and then obviously buying more than selling. So we did see that yesterday. Previous day was just slightly above zero, but we'll give a reference here in just a minute. So this is present day, and I'm going to move on to what we've seen before. So this is on our blog post that I posted with our X post this morning, so make sure you go check that out. So this is back in March when we saw the overall turn from a significant bearish downtrend to moving toward a bullish trend to the upside. So you see we still have the same, yes, Usher, it's recorded. So we still have the same components. It'll be posted on YouTube, and you can look at it on X when it's done. So we have the same components historically that we've seen before, same cycles, and this just continues to repeat over and over of what we've seen from our back testing and now our forward testing. So that's why we really put a high precedence on our market trend model. So let's look back here. You see, if I pulled this over, you'd see this has been a significant downtrend, and then now we're transitioning to a possible uptrend. So let's move over here. Same components. Cross back above the shorter term railroad track moving averages. We move to a linear up status. We see sustained filtered cumulative tick buying, indicating institutions are entering more positions, obviously in buying. And then we see the breadth indicator start to improve. So this snapshot here is almost exactly what we saw yesterday with the breadth indicator. We did not really get this single day of compression of new lows versus new highs decreasing, and then the new highs outpacing new lows, but it's close to what we saw yesterday. So we're at basically what we call a transition point or an inflection point. Will we see the cumulative tick continue? Obviously, you see that stalling within the overall colored ribbon and then emerge to the upside, or will we see a failure back to the downside? So really, as I said, this is an inflection point for us. But historically, we see the same pattern and same cycle over and over and over with the market trend model. So now we're here, and this is where we were previously in March, and then the previous October, multiple times in the market where we've turned from bearish to bullish. So we're basically going to watch day over day and see where we're at and see if we continue to emerge through the overall colored ribbon. And that would indicate that we're moving back towards a more bullish environment and possible sustained move to the upside. So key components there. Make sure you check out the blog post. We have extensive write-up about how to look for the turn via our market trend model. All right. Good morning, CH. All right. So let's move on to the SPX. This is our SPX option structure, options complex, largest, most notional value. We look at the SPX because of that reason. This is the SPXA. We separate the SPXA from the SPXP. SPXA is your larger institutional and market participant positioning. This is our 40,000 foot view. This is basically our tankers that are steering the overall trajectory of the market on a larger scale. So with our December expiry in our web app here, we're call dominated above and below spot price. You see transition extremely wide, but it continues to advance up towards 6,900, which is a bullish development. Now, key takeaway is we still have some in-the-money puts overhead, directly overhead. So this could be a little bit difficult to overcome unless we see these continue to erode. Look at our pre-market prep for the past week, roughly somewhere around in there, and you'll notice this had structure had changed to out of the money puts, red through this area here, and covering up the in the money calls below us. But now we're transitioning back to the structure improving and repairing itself. So now we have in the money calls below us, or call dominated, and then we have in the money puts overhead just a little bit that we need to overcome to move to the upside. You'll notice that 67.50 level. Keep that in your back pocket. I'm going to reference that today extensively. You'll notice the gradient there. So that is really a transition, also a transition point, even though it's not defined, but a transition point between the net delta, where we go extensively in the money puts overhead to calls out of the money calls here, as well as in the money calls below us. So again, supportive on any pullback should be within the overall SPXA, but we still have a headwind via the in the money puts overhead. So we would need to see these in the money puts either one of two ways: go through expiry and be removed, or mechanically be closed via institutions, which usually is not the case. Or we could see out of the money speculation, out of the money call speculation swamp the in money puts. and that will change this to green also. And we'll talk about that on our SPXP GEX ratio. All right, let's move on. The SPXP, all expiries turned on via our web app, call dominated. You'll notice the highest GEX expiry is 1128. We continue to see the structure improve, which we've noted here. This was red via the whole net delta. Now we're seeing reds and greens, and now we're back to call dominated. So again, the structure continues to repair itself a couple of ways, either via closing of mechanical closing of in the money puts overhead or out of the money call speculation, mechanical closing of out of the money puts below spot price, exposing the in the money calls below us, or more in the money calls being opened at the money or in the money, continuing to be supportive to the downside. So you notice transition areas here, note those for the all expiry, and then we'll move on to the 0DT. This is a great levels to note for swing trading via the all expiries, obviously, because these a little bit further out in expiration. All right, let's move on. The SPXP GEX ratio. This is basically like a put call ratio, but we add a time component, which is gamma. And this is more influence to the short dated call versus put gamma, as well as the in the money, at the money strike. So you'll notice we've been discussing that the GEX ratio in the red dotted line was below 1. That was indicating that the put speculators or bears were maintaining overall control. But with the move up yesterday, this is also spot price sensitive. So as you move up, you capture more out of the money calls, adding positive delta to the book, removing those in money puts. So again, now we have a positive overall look. We're above 1 just slightly. So what we would not want to see for, again, this structure continuing to turn or move from a bearish to bullish state is if SPXP spot price continues to appreciate, we would need to see out of the money call speculation continuing to go into the structure and complex, indicating that market participants are speculating for higher prices. So then that would be indicated via the GEX ratio moving up, as well as spot price moving up, capturing more of those out of the money calls become in the money. And again, that gives you more short dated call gamma captured in the overall complex, as well as out of the money calls being opened. And then conversely, out of the money puts being closed below you. And then as we say, moneyness matters, spot price appreciating, you're capturing those out of the money calls becoming in the money and being below spot price as supportive in the left-hand plane. So again, continues to improve. This is what we discussed about the turn, but we were extremely below the 1 level. So that was continuing to be bearish, but now we're moving back above 1. So we're moving slightly bullish. So if you were thinking about entering positions, this might be a time to start to get in motion, but we still want to see the market trend model continue to improve, as well as the structure continue to improve in that net delta column, changing from red to greens, indicating that we're full call dominated from market participants and speculators. All right, let's move on to the delta balance. Again, this continues to improve. Look at yesterday's pre-market prep, but we're continuing to add to the structure improvement. The red dotted line is the left-hand plane here. As I stated yesterday, we were moving above the 0 line. So that was indicating the in-money calls below were increasing or being added to the complex via spot price improvement. So that was going to be supportive. The red or the green line, bolded line, or green dotted line, sorry, is the right-hand plane. That's that out of the money call speculation. So yesterday we discussed that had a negative slope, and we were not seeing out of the money calls going into the complex. So it was going to be difficult for price appreciation, depending on what we saw intraday market participants doing. So intraday market participants yesterday, via our vol-m command that we continue to post, market participants were speculating to the upside. Both of those centroids were in a positive slope and moving to the upside. So indicating, again, market participants were adding calls to the overall complex. Now, we're still below the 0 line via the right-hand plane. So we need to see this continue to improve. Out of the money calls need to continue to go in the complex. SPX spot price does not go where options are not speculated. So if we do not have those calls going into the complex overhead, again, it's going to be difficult for price appreciation. This is where that 6750 area comes in, as well as our transition levels for today. Improvement in the delta balance, which is the aggregate, the blue dotted line, slightly moving above 0. So we're not in a full-blown bullish transition in the overall market, but we're transitioning from the bearish to bullish, still prone to failure, not out of the woods yet. We would need to see this completely go back to an overall structured look like we saw back here, where right-hand plane, left-hand plane were both above 0, and the delta balance was pegged at +1. And you can see what happens is when the overall structure continues to erode, we start moving to the downside like we did in early November, and then we were improved in the overall structure, moving back to the upside. and then we move back to the downside within the overall structure again. So you'll just notice, sorry about that, you'll just notice that these waves just continue back and forth within the overall market. And that's what happens with the structure and what we see within the overall market trend model also. So again, continuing to improve from bullish to bearish, but we need the structure on out in time to significantly improve. As you'll notice here, the right or the left-hand plane is above the zero line. Delta balance is above zero for next week. And we do see the right-hand plane improve pretty significantly on out in time. And we need to see that continue in further expiries. All right, let's move on the SPXP net stack command. I know I covered a lot of content there. I really wanted to make sure we explain that well of how we use our tools within Gamma Edge to look at the transitioning of market and get ahead of what is happening with market participants and just not follow the herd, understands what's happening with the SPX option structure. All right, net stack command for today. This is high sensitivity levels. These are kind of our goalposts. 6750 on the charm level. Going to continue to be a headwind because these out of the money calls will continue to decay overhead as time ticks on for today. So that will be that area to the upside, as I talked about on all expiry, as well as the charm level overhead that will be difficult to overcome. And then we have what we call locked horns. We have in the money calls below us, in the money puts overhead, which I already discussed. And then the net gamma is 6750 out of the money calls here, out of the money puts here at 6700. And then Vanna, we talked about extensively yesterday to our members intraday, that if we moved above these levels, then we have adding contributions to the overall complex, which can push us higher. You'll see the Vanna here is significantly higher out of money calls at 6750. So if we do get above 6750, we do have that tailwind, which I kind of spoke about yesterday also on the net stack command, moving above, I think it was 6720. I think was the level we had a tailwind 6700, 6720. We had a tailwind via Vanna. If the volatility drops, we see out of the money calls coming into the complex. You need to have those two components for a Vanna rally: volatility drop, out of the money call speculation coming in, which we had both of those components yesterday on a large margin. That will lead to the Vanna rally and aiding a tailwind and moving to the upside. We also have a blog post about that. You can check out at gammaedge.us. All right, SPXP 0DT command or 0DT structure, call dominated, which is great. Those will be supportive, dampen volatility. You see the expected move dropped significantly. Yesterday was 1.39%, roughly 96 points. Now we're down to 58 points. So again, still have some choppiness if volatility increases, but dampen volatility as well as the expected move on any pullbacks. Within transition today, it will be extremely choppy. We've already talked about that. We continue to reject 6710 this morning pre-market. We'll check that in just a minute. And here's our drunken sailor range down towards 6650, which should be supportive on a pullback. That may be an area where we could try to get long if we see the market structure as well as the market trend model continuing to maintain its overall structure and sentiment. All right, GameEdge.us, follow us. That's who is providing this presentation right now. Click on the newsletter, enter your email. You'll be delivered this into your inbox, tools, strategy, everything that we go about here at GameEdge. And here's our blog post, all of our education posts. I've been posting these this morning, discuss those extensively. Go ahead and check those out. That's all free. And then our flagship options course is GameEdge Fast Pass. All right, thanks everybody for joining us. We'll go ahead and move over to the trading view chart. And then I may have to run this morning to a couple meetings, but all right. So here's our GameEdge levels for today. I already discussed 0DT transition areas as well as the drunken sailor range. I've just drawn in these areas for reference, for just a visual reference. I like to put these on in the morning. This gives me an idea of my trading plan, not my exact trading plan, but where I'd be looking. So any pullback to the top of 0GEX or the bottom of the 0DT transition levels may be an opportunity to go long. If we reject at 6710, that was an opportunity to short. Again, not an extensive short at the moment. It will be depending on what intraday market participants are doing via our vol-m command. Are they speculating to the downside? Are they speculating to the upside? Or do we have the crossed centroids indicating a consolidation pattern, which would be extremely choppy? And then you may want to sell something above these areas with the thought that we're not going to move into those areas, or sell something below these areas where you may be thinking that price is not going to go in those areas also, depending on a credit spread or a put credit spread, or however you want to do that positioning wise, or express your overall options structure and trading plan for the day, which we do go over with our members within the overall Discord. for our members. So again, areas where you may see rejection, areas where you may see supportive type action, and then transition areas if we continue to move above those in a more positive gamma call dominated structure environment for price appreciation to the upside, which we've covered on the SPX 0DT web app and structure for today. So key areas for me, I'll be watching 6710 already this morning, obviously identified by price as well as the transition level, and then top of DS 6725, and then up towards 6750, which we discussed earlier, that key upside point where we do have some in the money puts overhead, as well as that charm of those out of the money calls, which will be difficult to move above. And then to the downside, 0 GEX 6680, 6700 is around Livermore level. That will always continue to be important also within the overall structure of transition. And then for below the 0 GEX level, moving to the downside towards 6650, that's kind of that index area, which we discussed, and as well as the bottom of DS, which could be supportive. Below that DS level, then obviously would see significantly more weakness if the market trend model as well as the structure changes. So, all right, thanks everybody. We went over a ton of content. We went over a lot of tools this morning. If anybody has any questions, you can throw those in the chat on X or YouTube. We'll try to answer those as our team is available. I unfortunately have to run this morning, so we're going to conclude that presentation. But again, like and subscribe on X and YouTube. You'll be notified when we go live with our content. And as always, manage risk, everybody. It's a shortened week. Most likely you'll see volume continue to drop, and consolidation or choppy price action is probably going to be the name of the game after two large moves, two days of large moves to up to key levels. And we've had the bounce. And now, as I said, we discussed the turn, and we'll see where we go from here. All right. Make it a great day, everybody. Thanks. We'll see you later.